Today's focus, as you might imagine, now that we have all this out there, is really going to be to talk about what we saw. Good afternoon. We have inflation, jobs, and the Fed all in 1 week, so a lot to cover. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of noise along the way. So last week, to tee up the conversation here for today, last week we had shared our thoughts on what to expect around this big week of market moving data points and Fed speak and all the above. So today's focus, as you might imagine, now that we have all this out there, is really going to be to talk about what we saw. So let's start on the inflation side of it. This actually goes back to last Friday. So last Friday, we did have PCE data come out, which is a measurement of inflation. And it came basically exactly as expected. Last week, we had discussed that we felt that it was very likely we would see higher numbers for December, given the kind of shorter term areas that were impacted in the November data for inflation. And that's exactly what we saw. So both the headline and the core PCE or inflation data points were up 0.2% for the month of December, right in line with our expectations and just the market in general as well. But I realize it sounds funny sharing the December inflation numbers here in February, but the data is delayed. We always get these data points towards the end of the following month, basically. So again, keep in mind too that all this data is from the month of December. Just briefly, I do want to touch on spending and income before we get to the Fed and jobs. But spending was up big. It was up 0.7% for the month in December. And income was up as well, up 0.3%. So again, as we kind of continue on this path, inflation in line with what we had expected. We'll talk here about the Fed, and then we'll talk about jobs as we wrap up as well. As far as the Fed goes, probably no surprise, and certainly something we touched on last week as well. There was no change in interest rate policy, and I don't think that's a surprise to really anybody. I think everybody had felt that the Fed was going to be holding rates in this particular meeting. But as I had mentioned last week, what was most important was really the press conference and what Fed Chair Powell kind of shared in that message. And the general theme, if I can kind of sum it up into maybe 4 words, is his general kind of theme and something he kept coming back to was that we need to see more. And really what he was referring to every time he shared this is that they just need to see more data that inflation is actually coming down. I'll talk more about that here in a minute, but there's a couple other things I want to point as well. Fed Chair Powell did share that he thinks that they need to see the economy they don't need to see, excuse me, that the economy is softening anymore. So if we kind of look backwards a little bit, one of the things that he had shared was that basically to cool inflation, that we may need to, reduce the labor supply to some degree or get that more in alignment, kind of cool the economy down in order to see the actual impacts of inflation coming down. And in this meeting, he said that he doesn't necessarily see that as a key ingredient to keep inflation down anymore. Overall, I would share that he seemed kind of like timid or not willing to answer any questions with a whole lot of conviction of why not cutting for a while. One of the big changes, I think, was that all of the conversation was about inflation coming down and confidence it will continue to stay down. There was, again, hardly any talk except what I just mentioned about the labor market or the economy in general. It seems like now the Fed really is almost entirely and only focused on the inflation rate. Now, obviously, if there's a big shift in the labor market or the economy, I'm sure that would change their tune a little bit. But it seems like from this conversation, we can watch inflation closely and have a pretty good idea what the Fed is considering. Again, they want to see more good inflation data, not necessarily better data. So they don't really care that the number keeps coming down. They just want to see a longer track record of the kind of path that they're on. And again, working towards that 2% as has always been the case. So I think, as expected, the Fed was kind of clear that they're not going to cut rates in March, which is why I think we saw some changes in the markets there. But I would say overall that actually the Fed was maybe a little bit more dovish. In other words, a little bit more on the side of being close, like not closer, but being open to cutting rates. And, I guess with that, the market obviously reacted downwards because I think even with that tone, it was clear that they are really not focused on that, and probably not focused on that in March. And so I think the Fed or the market has been pricing in this like perfect situation, and obviously that's not necessarily what happened. But I think that, what is interesting is that as we kind of see this, with the slower economy and the labor market and all this stuff kind of being taken out of the equation, it seems like the Fed is expecting this like perfect Goldilocks situation of lower inflation, no recession, decreasing rates, and no economic slowdown at all. So if we see that, would be incredible. But that is a tough ask. So we'll see what comes. But that seems to be what the Fed is really focused on now. Now, fast forward a little bit to switch gears to basically this week, and then what we have tomorrow is the jobs focus. So again, inflation basically higher than last month, in line with expectations. The Fed did not change rate policy, but certainly shared that they do not plan to cut in March. And then on the job side of it, jobs still seem strong. So basically, we had JOLTS numbers show job openings of over 9 million just this week. And then ADP employment report shows that we added 107,000 jobs, although that is a little bit lower than expected. That one, again, the ADP employment report, we take with a bit of a grain of salt. So tomorrow, the non-farm payrolls one is going to be the one to watch. Those two data points are a little conflicting, the job openings and the jobs added for ADP. But again, we'll see what comes out of non-farm payrolls tomorrow. And for the most part, certainly seems to be strong. So be sure to tune in next week. We'll cover the non-farm payrolls number that we get tomorrow. And then honestly, it's a little bit slower week of data, but we have earnings season continuing. So obviously, I think Apple reports today. We had Google and Microsoft yesterday. That big kind of push of earnings is still continuing into next week as well. So we'll be sure to cover that. But we will skip our question of the week here this week because we had so much to cover around, the follow-up from last week and the Fed. Be sure to tune in next Thursday at 3, and we'll catch you up on some of the earnings data and the non-farm payrolls from tomorrow.